Chapter 15 covers managerial accounting. When you think about managerial accounting, this is accounting that provides economic and financial information for those inside of the business organizations, such as the owners, managers, and other internal users. This chart is a comparison between financial accounting, which we studied during the first 4 weeks, and now managerial accounting, we're going to study the last 4 weeks of the semester. Financial accounting, again, was more external reporting. Information prepared to be seen by those outside of the business organization. And because this information is viewed by those outside the companies, there's a verification process that must be completed by an independent accounting firm, making sure the company follow what's known as the generally accepted accounting principle. But managerial accounting is more internal information. Reports prepared by the company only to be seen by those inside of the business organization. Therefore, no independent audit is required of the managerial accounting information, although some companies may choose at their own leisure to have what's known as internal audits performed. When we think about the management functions, and I'm not going to go through each of these bullet points, but the main things you do as a manager are planning, directing, and controlling. So from a planning standpoint, we'll focus on things such as forecasting budgets. We'll look at how do we maximize our short-term profit and our market share. Directing is the objective or the responsibility of management, making sure that our employees are motivated, we have incentives put in place, and that things are running smoothly. Controlling. We want to make sure that the goals and objectives of the organization are being met and that we have some type of system in place for evaluations and things of that nature. We're going to focus first on manufacturing costs. Manufacturing costs. What we're saying here is, what are the different type of activities or processes that it takes to convert from raw materials into finished goods? So let's assume that we are a manufacturing organization and we're going to produce some type of product. Here we have the three main components of manufacturing costs, what's known as direct material, direct labor, and what's known as manufacturing overhead. Again, direct material, direct labor, and manufacturing overhead. Direct material really will focus on the actual materials that are going to be used to produce the actual product. So whatever material or parts that we're going to use to make the actual product, those items are known as direct material. We also have indirect material. These are also parts that may be used to make the product, but they're not the main material. So you may think about, if we're producing something, an item, we may need nails and screws, those type of items to make sure that the product stays in place. Yes, those items are materials, but they're known as indirect material, meaning that it's not practical to trace those back to a finished product. But other larger items such as steel, for example, or a steering wheel for an automobile, of course, those type of items will be called direct material that we can trace directly back to the actual product. The indirect material is part of what we call manufacturing overhead that we'll talk about in a little bit. Direct labor. we're focused on the labor costs of those employees who are directly tied into the manufacturing of the actual product. So if you think about an assembly line, those employees on that assembly line making the actual product, their salaries or wages are known as direct labor. Now, we're going to have other factory employees, such as the receptionist, it could be the administrative assistant, it could be the security guards, it may even be the factory supervisors. These are individuals who are also working inside the factory, but they're not actually making the product. Their labor costs are known as indirect labor, and we'll see that their labor cost is also part of what's known as manufacturing overhead. So think about a plant, think about a facility, think about all the costs taking place inside of that manufacturing facility, whether it's for salaries, for manufacturing, it could be for material, it could be utility costs, rent costs, all those costs taking place inside the actual manufacturing plant. They fall under one of three categories. They're either direct labor or direct material, and if they don't qualify as being direct labor or direct material, they go into this third category known as manufacturing overhead. So indirect labor, indirect material, other items such as, again, rent on the factory, utilities on the factory, depreciation on the factory equipment, they go up on this third catch-all category known as manufacturing overhead. So what we try to do in accounting is determine what is going to be the actual product cost, the cost to make the actual product. And that cost consists of three components: direct material, direct labor, and manufacturing overhead. Now, what you will learn is that there are different ways of assigning manufacturing overhead costs to different products, and we're going to study that over the next few weeks. So these costs, known as product costs, initially are recorded into an inventory asset account. Again, your product cost initially is recorded to an asset account known as inventory. These product costs remain as an asset until we sell the actual product. Once the product has been sold, at that point in time, they become an expense known as cost of goods sold. But your product cost initially is recorded into an asset account known as inventory. It's not until you actually sell the product, at that point in time, it becomes an expense known as cost of goods sold. In comparison, there's something known as period costs. These are non-manufacturing costs. These are costs taking place outside of the manufacturing plant. They're known as selling and administrative expenses. So think about the actual cost for advertising, costs taking place at the headquarters, any type of selling and administrative expenses are known as period costs. Those costs are going to be expensed as they incur or take place. So product costs are recorded into an inventory account as an asset initially, but your period costs are going to be expensed as they incur or take place. So here the graph is showing our product costs, direct materials, direct labor, manufacturing overhead. Again, these type of costs goes into our inventory asset account, but your non-manufacturing costs for selling expenses and admin expenses are going to be expensed right away, and they're referred to as being period costs. So let's go through an example of trying to figure out these different type of costs if they're considered to be a product cost. If so, what type of product cost, or if they're going to be a period cost. So you ready? Okay. Suppose you started your own snowboard factory, KRT Boards. Here are some of the costs that your snowboard factory would incur. Assign the following costs. The first cost of material cost is going to be $30 per board. So that, of course, would be direct material cost. The labor cost is $40 per board. That would qualify as being direct labor cost. Then we have the depreciation on the factory equipment, which is $25,000 per year. That depreciation goes in the category known as manufacturing overhead, which is and all three of these components make up what's known as your product cost. Next, we have the property taxes on the factory building, which are $6,000 per year. That's also an overhead cost. The advertising cost of $6,000, what we call a selling expense, that's a period cost. Sales commission of $20 per board would be a selling expense. That's a period cost. Maintenance salaries for the factory facilities. That's going to be an overhead cost because this cost is still inside of the manufacturing plant. The salary of the plant manager. What are you thinking? Yep, that's going to be an overhead cost. It's going to be called indirect labor. Cost of shipping the boards, $8 per board. That's going to be a selling expense. So we're separating our period cost from our product cost. So if we were to produce 10,000 snowboards for the first year, we're saying what would be the total manufacturing cost? Well, the material cost is going to be $30 per board times 10,000 board. The labor cost is $40 per board times 10,000 boards. Depreciation was $25,000. Property taxes were $6,000. Maintenance salaries $45,000. Salary plant manager was $70,000. Therefore, our total manufacturing cost or our total product cost for the year would equal $846,000. Remember that your product cost initially goes into your inventory account, which is an asset account. Once we sell the asset, we'll see how it goes from being a product cost into what's known as our cost of goods sold. Okay? So stay tuned for part 2 of our chapter 15 lecture.